Welcome back, everyone. Happy to have you here. Today we're going to be looking at another case study in regards to financing solar panels. So if you're in the market right now, you're looking at solar panels, talking to different people, watching different videos, here you can actually see an actual case study of how this looks like, right? We're going to break down the cost, the options, and I have my friend Maureen today, who's really an expert in this field and an educator, a teacher first, not someone that's just going to sell you a system, but someone that's going to actually walk you through your options, the process, and really making sure, number one, you can afford this, right? You can afford to make the switch, understand other things that may come along the way, right? And just be fully confident in your decision to go green for your home and make it more efficient, right? So with that being said, I want to pass it over to you, Maureen. Thank you for being here.
Thank you so much for having me. I love doing all of these educational YouTube content creation things, whatever, helping people understand solar because there's so much involved. So it can be a lot. And it's really my pleasure to help people understand all the options available and hopefully just get them really feeling empowered so they start to know what questions to think about, what things to be aware of if it is something they're considering. Because there's a lot. There's the energy savings conversation, which is what most people are in. Some people are just passionate about going green and sustainability. Some people, whether they live in an area where there's a lot of blackouts or hurricanes, or maybe there is an elderly person in the home or someone that requires power nonstop for medical devices. I mean, these are like rare situations, but it happens. And so those people are really concerned more about energy security and energy stability and safety. So there's a lot of different reasons why someone may consider going solar, but I would say cost savings and hedging against inflation and feeling like you're in control of that is probably about 95% of people consider
I would say that's like number one. And this audience, the type of people that are watching this channel are all about, optimizing their finances, being cash flow efficient. And so if it meant putting panels on my roof, that's going to save me a couple $100 a month net, or if it's going to maybe cost me slightly more in the beginning, but if I have a strategy such as velocity banking to accelerate the debt, and then moving forward every year, then there's a true net savings on that particular expense, which is a lifetime expense. Energy is a lifetime expense that we all have. And so when we go with the major electricity companies in your state, usually there's only like one, maybe two options. I know in Florida it's just FPL. So you're subject to whatever their pricing is. And we've experienced in just the last couple of years the cost of electricity rising, just like the price of eggs and gas, how things were shooting up. Electricity also shoots up as well, but it does have a steady increase over time. So it's never going to get cheaper. It's just going to get more and more and more and more expensive. So being able to have a system such as solar panels that either you own or you lease, and it's going to reduce that price on a month-to-month basis, but then there's, on the owner side, there's the financing, and then there's just the ownership of that long term. That speaks volumes for certain people. But as you mentioned, mass majority of people are just looking to save money. And if it means that, I'm helping the planet, or I'm being more efficient, great, right?
Right. Like the icing on the cake.
Icing on the cake. So with that being said, you've helped another one of my clients, audience, subscribers, right? And so I'd like you to go into this particular case study, and I'll take some notes and we'll review things. And the action step today really is for you guys to comment below your questions. And also, if you're looking for someone to serve you on helping you find the right system, understand the pricing, understand your options, there's a link below in the comment section, in the description, to get a hold of Maureen, book a call, and she'll walk you through that process. So that's going to be the action step for today, as well as just commenting questions that maybe we might have missed that you were thinking.
Yeah, that's great. I keep thinking about the cake. So I want everyone to understand that, going green, whatever, there's so many secondary benefits, but we're really going, especially with this channel, we're really going after, does it make sense financially? Number one, is the home a good fit, right? If you live in a forest, we want to make sure that the home's a good fit. You're not living in a forest, not a lot of trees, that the utility company actually works with solar. So if all the mechanical things are in place, then yeah, then the numbers are either going to work or they're not. And as you'll see with some of these case studies we're going to do, there's different strategies to go solar, but that is what we want to make sure that we can bake a cake on our own and it tastes really good without the extra icing and fluff, and the icing just makes it taste that much better. So yeah, you can ask your questions and we'll see if we can bake a good cake. But if you want to share the screen,
Absolutely.
I guess. Okay, so this is, if you watch some of the other videos that Denzel and I have done together recently, we're really going over leases and the differences between loans and leases. And there's really not a right or wrong, good or bad. There's just different. And so this particular homeowner, they're in Florida. They signed contracts over a year ago. We had installation prior to last summer. So their system's up and running now. They're happy. Everything went great. It's about a 4-month process from contract signing in February to installation and permission to operate in June. But after going back and forth with the homeowner, they decided to go with a loan that we actually don't have access to anymore because interest rates they're just crazy, all the different financing options. So there's always the opportunity to pay cash if you want to own a system. They really wanted to own a system, and you can pay cash to own a system. You can also use a HELOC or a HELOC, any sort of external financing someone can secure. And then we run the deal as a cash deal with my company as the contractor. Or I don't have any alliances with any of the solar industry financing companies, but I do have access to them. Just kind of like when you buy a home, it's Wells Fargo, Bank of America. There's a bunch of different lenders that can do the mortgage. So there was a 3.99 available at the time. It may seem like, oh my gosh, only 3.99. Yes, but there's also dealer fees with all these loans too. So sometimes the lower the interest rate, the higher the dealer fee and loan amount. And then the higher the interest rate, like there's 11.99s right now, but there's really low dealer fees. So those are great if someone wants to pay off the loan as quickly as possible and not ride it out for the next 25 years. Like an 11.99 on his system would have created payments of $750 a month. You can see up here, the payments are $508. So if you just look at these numbers, if you look over here, his utility bill is averaging, or was at the time, around $333 a month. We're paying 16 to 17 cents a kilowatt hour right now for electricity here in the state of Florida. And what you're looking at here is this, let's just say his bill with the utility company is going to conservatively only increase 4% average over the next 25 years. And I see conservatively because I think it's going to be a lot more than that, but I don't want to deal too much in hypotheticals. If you're looking at the last 3 years, it's gone up 60%. We were at 12 cents a kilowatt in 2020, and now we're at 16 to 17 cents. So in the last 3 years, it's already increased 60%. It may go up and down. It's kind of like the stock market. We know without a shadow of a doubt, there's going to be the upward trend over time. I know Denzel had mentioned comparing it to gas, right? We might be paying less for gas now than we were a few years ago, but we're never going to be paying $1 a gallon again. So it might go up a lot, down a little, up, 10 steps forward, 2 steps back, 8 steps forward, 5 back. But it's going up. Commodities are going up, inflation and all that. Right. So let's just average 4%. So that's what this green line here is. So if his family continues to use the same amount of electricity over the next 25 years, they're going to be spending over $166,000 to the utility company. Now, with this loan that we were able to find him, he's able to own his system. He'll be paying, if he doesn't pay off the loan sooner, if he just rides out the $508 a month payments, again, the blessing is might be a little bit more now, but it's fixed. He knows what he's going to be paying for his energy over the next 25 years. And then also what happens over the next 25 years is it actually stops. Now the system's owned. The system is actually going to work another 10 to 15 years. They work 35 to 40 years if they're well maintained. So he's essentially getting like 10 to 15 years of free energy after that, because with the utility company, there's no way to ever stop that bill unless he just wants to stop using power. So I think that's another misconception some people have in the beginning is they think, oh, it's going to cost me more. They're thinking I'm adding something to the house, so it's going to be an extra bill, versus I try to get people to think of it as it's not really an extra bill, it's a replacement bill.
Right.
So it's like, I know you had mentioned having options. A lot of people say, oh, well, why do you have Verizon? Well, I have Verizon because I like the coverage, I like the service, and I got a better deal than with T-Mobile or AT&T, but I had options. A lot of times people don't think they have options with their electricity because it's a monopoly with the utility companies. So if you can start to think of solar as solar is now giving me an option for my electricity source. And now we just have to see, is it cheaper? Does it actually make more sense to go with solar versus staying with the utility company? Because now we have options to consider versus blindly signing up thinking there's only one way to get energy and you're just kind of stuck. So solar can unstick you when it works. So you could see here, because this is a loan where he's technically owning the system, he does get access to the 30% federal tax credit, which is 30% of the total loan amount. So you can see the tax credit down here is almost $40,000. And I remember in conversations with him, this was really important because he's a business owner and this is going to help him actually pay 40 grand less in taxes than he would be paying without the solar. There was also an incentive going on at the time. Sometimes these incentives are available either from the dealers or from the solar companies out there, the installers. So there was a $6,000 cash incentive available. So he actually got a check from my company at installation day for $6,000. So if you take the total cost of the loan he ended up signing, minusing out the federal tax credit and the cash he's getting back, the net cost of the system is $86,000. And that's what you can see over here. So he's going to be paying this if he rode out the loan payments over time, but then essentially it's really like he's only paying 86,000 or so with the tax credits. You can see he's saving half pretty much the amount of money he'd be spending if he were just paying the utility company. And I'm just going to show you this as well. This is a bottom part of the proposal. Just see the numbers a little bit better. So this was the loan that we chose for him at the time. You can see it's expired now. It doesn't exist anymore, this low interest. But this is the actual credit he's going to get back. Anyone in any state you live in, everyone has access to the 30% federal tax credit. If you are W-2 or 1099, if you are paying taxes, you will get the 30% federal tax credit back. This is not always a guarantee. This comes and goes. And then here are the payments broken down. So
that's everything. Beautiful. So just to kind of recap here, just kind of taking it to the whiteboard, kind of like in summary, we had talked about the cash price here, $80,969.72. So for someone that's considering accelerating this type of loan amount, right? You had talked about that we can do in-house financing, which is something that you're able to essentially broker, right? That kind of a deal. You have access to all these in-house solar financing companies. There's a handful of them, and you're able to kind of navigate all the different options, show it to them in an Excel, and people can kind of just pick, right?
Yeah.
So you bring that option. Then for those that are watching this YouTube channel, we have our own financing or self-financing, where we can either use a cash value life insurance policy, we can use a home equity line of credit, we can use a variety of credit cards, we can use a business line of credit, personal line of credit, whatever it may be. So it's going to be very important to compare, right? If I went with in-house financing, they're going to tack on these high dealer fees if I go with a low rate, right? If you're someone watching and you have a significant amount of capital built up either in your cash value life insurance policy or your home equity line of credit, and let's just say you've paid off a ton of debt, maybe you're not doing any investments at the moment, and you just have a lot of capital stored up saved, you may want to consider or weigh self-financing versus in-house financing, you can get around the dealer fees, right? Because no matter what, there's a dealer fee on no matter what the interest rate is, right?
Yes. So,
Right.
yes, they're always changing. I think
They're
for a
always
while they were like as low as 3%, some of those 11.99s,
okay.
and they're going up to like 4.86% now. But
Gotcha.
it still can be a better option for someone to leverage their
Yeah.
cash if they're instead of paying cash.
So on a $80,000 system, right? If you were to finance it at say the 3.99 in your example, are you able to see what the percentage dealer fee was and what that total number is?
Yes, I can show. So I have a spreadsheet that has all of the different loan options.
Okay.
And we change our contracts based on like the company that I work with works with the same financing companies that service all the whole solar industry. But because there's so many of projects that we push through, we're able to negotiate slightly better rates, I think, than some other company. But it's the same main players. It's SunGage, it's GoodLeap, it's Sunlight Financial, it's Mosaic. It's like these 5 companies that
Yeah.
come in and out of contract with us. But what I've done is I compile a spreadsheet that shows every single interest rate available and term length too. So there's 7-year all the way to 25 years with each of these companies, and they're all pretty similar, maybe off like 0.5% or so. And it will actually show the dealer fee for each one. So I
So
can see okay, the 25-year 11.9 has a 6% dealer fee with these 3 companies, and the
got it.
3.99 actually has a 38% dealer fee. I can actually, let me see, this is an updated one, but we can just quickly pop it up on the
So
screen. So
yeah,
the fin-
what was the dealer fee roughly on this one for this system? Do you
so
remember
for
what it
that
was?
system, 25-year Good Leap. It's not on here anymore, but the current Good Leap for the 449, which is the lowest they have now, is a 38.49% dealer fee.
Gotcha. So it's a percent. So 38.49%.
I'm going to
So if we,
share if you want to pull this up. I don't
yeah.
know. We fund it
So
for
if we
everyone.
were to, so you would take that number.
Inside spreadsheet, but I show this to all the people that I'm, working with because I'm like, don't let the 449 be shiny. If
Right.
you right here,
Yeah.
it's
So
really small, but you see this percent, but they're all pretty similar. Look at this one with SunGage Financial 449 and how high this percent is, and this home run is different. But that's why I tell people like it's not always better to have these lower interest rates. It just really depends. If it's a lower payment over time, either way, I won't do it unless we save people money if that's the primary goal. But I'll always caution them, hey, it might be better actually to do like an 899 in the middle, even though it doesn't sound as nice as a 449. But if you think there's a chance you might pay it off sooner and you can afford the little bit higher monthly payment in the beginning, because you got to pay off the total loan amount no matter what. And there's no pre-penalty with all these, which is awesome. You can pay it off at any time in advance. And so it gives you a little wiggle room, but look, it's a big difference between a 15.99 and like a 38.49 in terms of what you're actually borrowing and what you're required to pay off if you did want to pay it off before the 25-year term.
got
So I know it's higher now. This was an older one. So this hasn't been updated since October. But the 1199 at the time, before I really fell in love with leases and started really educating people on leases, it was only a 4%. So this was like as close to leveraging cash as possible. So I was like, hey, just don't pay cash, put it somewhere else if you're going to make more than 4% on your money. And then you're not having to come out of pocket. And then you have some wiggle room next couple of years, get the tax credit, throw it at it, like pay it off in the first couple of years, but you would never want to ride this out, obviously, the whole time. But now I think these 1199s are close to 6% for all these companies. Let's see. This one's got a 1049. This one's a 3. So you could see how comparable they are in terms of the products they offer.
3% dealer fee is a massive difference between,
Yeah,
30, 35%.
exactly.
So if I take it to the whiteboard here, just to kind of have people really understand this even more, when we go with a high rate equals low dealer fee, right? Low rate, and again, a lot of us have been conditioned to always look at the interest rate, and then low interest rate means lower payment. That's not exactly the case, depending on how we finance things as it relates to solar panels. So when you do a low rate with in-house financing through the solar provider, solar company, that equals high dealer fee.
Yeah.
Right.
They're so sneaky.
And if it's a $80,000 system and times that by 35% dealer fee, so we're gonna pay. Let's just say we're gonna pay 28 grand in dealer fees just to get that really nice low rate. So again, those of you that are watching and on this channel, we're always looking at different ways of financing things. If we don't have, and most people don't have $80,000 just sitting around, right? But there is a good group of you watching who have cash value life insurance policies where maybe you have near that amount or close to that amount. Or say, for example, you've got maybe 50,000 in cash value built up and you've got a HELOC for 100,000. So you owe nothing on the HELOC, and let's say the interest rate is 7.5%. Right, I think prime right now is 8.5. So let's say you've got a HELOC with an interest rate that's prime minus 1%. So now you're at 7.5. Let's just say that's your current variable interest rate. Now, yes, this rate is variable, right? Let's just use that. Give that full context there. Yes, 7.5% is higher than, say, that 3.99 that we saw. Okay. But it costs you $28,000 to get the 3.99. So now your system is 80 plus the 28, now it's at 108, versus what if you borrowed at 6% in your cash value policy? Let's say you took 30,000 of it out and then the other 50 you pull from the HELOC. So now you get the cash price, no dealer fee, okay? And let's say you have the intent to accelerate that $80,000 purchase. I would argue you would get there faster despite having a lower interest rate over here, right? Because of our strategy of velocity banking, we're going to be able to dump all of our income into this HELOC to dramatically reduce 7.5%. And when we look at the net interest costs in a year, we could more than likely bring that 7.5 way below 3.99. And even if we didn't, we're still dramatically ahead because we avoided that $28,000 fee. So for those that are watching, make sure you're thinking outside the box, looking at all the options here, especially for someone that's saying, I want to own solar panels and I want to pay it off as quickly as possible. Okay, if that's the case, then this would be one option. You could also say, I have an intent to, pay this off sooner. And then correct me if I'm wrong. Also, with this option, Maureen, we also get the federal tax credit, right?
Yeah, exactly.
So we get the tax credit on that, and the way that tax credit works is based on whatever your tax liability is year to year.
Sorry, I just want to point out the tax credit is a solid. The reason it's the 39% for him was based on the loan amount. So it would be 30% of the cash price. So it's always what either the loan amount or the cash price. So it'd be 30.
So it won't be that number. Yeah. It would be lesser number.
Yeah, because that's like 50%. Exactly. I just want to make sure.
Okay. Yeah. 30%. Thank you for that clarification there. Yeah. So for those that are watching, just take 30% times that number, whatever you get. That's your federal tax credit, and it's based off whatever your tax liability is that year. So if you have only a $15,000 tax liability, you're not getting more money that year, right? You're just
you have 10 years. That's how they do it. So you have 10 full years of ability to get all of the tax credit. So if you have a $15,000 liability every year and you have a $35,000 tax credit at the end of 3 years, you will have, so it's 15,000 year 2, and then the remainder 5,000 year 3. So it'll take 3 years to get the full 35,000 tax credit. If I'm just throwing numbers out there, if that's what it is.
Got it. So that's one option, right? Then the other option that you kind of alluded to, which was, hey, instead of, liquidating assets or tapping into debt to get the cash price from the solar provider, instead of doing that, you'd say, okay, hold on to your cash, hold on to your capital, and let's say you invested, right, instead. So if you can invest and then say, okay, let's not get the low rate, let's use in-house financing, so no money out of pocket, go with the high rate, low dealer fee, basically getting as close to the cash price as possible, right? So that means no money out of pocket. Whatever your electricity bill is probably going to be equal to, maybe slightly more, right? Just depends on how your production is in your home. Let's just say, for example, it was equal to, right? And just from your own experience, Maureen, is that typically the case when someone goes with a high rate, low dealer fee? Is the monthly payment on that typically equal to whatever their electricity cost was, or do you typically see it being higher?
Usually 3 times the amount.
Usually 3 times the amount.
Yeah.
Of
So
their
that's
original electric bill.
Yeah. So like for
Okay.
example, with the one that we just showed, his bill was like
$750,
333 was his bill,
Okay.
utility. The high dealer fee, low rate put him at 508.
Okay.
If he had gone with a high rate, low dealer fee, he would have been at 750.
Right. Okay.
So but
now,
again, that's like if you can handle the 750 payment for 2 to 3 years, the goal always with that high rate, low dealer fee is essentially we're thinking of it as cash, you're paying it off. So your goal is you're going to knock it out in the first 2 to 3 years, or we're just not going to do it. So it's all about making sure that they can handle the monthly payment because that's the minimum that they're required to pay. But they're also intending on knocking out more payments, taking the credit, the tax credit, probably throwing that at the loan as soon as they get it after 12 to 18 months, depending on when in the year they're installing and how far away it is from them, with next tax season. So that's always the strategy with that low dealer fee, higher rate.
Understood. So then we need to make sure if we go with the high rate, low dealer fee, yes, our payment goes up. Now, when the payment nearly triples, doubles, whatever it is, we want to make sure you're still positive cash flow despite that higher payment. And the reason why the payment's higher is because technically we're going to be paying this off faster, right? And the rate's higher, but the actual loan amount is say $25,000 less, right? It's going to be significantly less, closer to that cash price. And then typically with the high rate, low dealer fee, are we also going out 25 years with it? Does it make sense to do that, or does it typically make sense to shorten the...
No, because it's shortened.
Then the payment's even higher.
Yeah, because you can definitely do a 7-year term, and then it's going to be, a couple $1,000s. Now you're on the hook for the payment. So the whole thing is, it doesn't really matter because the total loan amount's the same. And so there's no prepayment penalty or anything like that. So it doesn't matter. The loan amount, you're borrowing $90,000 to do this system. So your loan amount, so it doesn't matter if you pay it off in 1 year, 2 years, 7 years, 25 years, aside from whatever interest is added over time, the only thing that you are required to do is pay off that total loan amount. There's no prepayment penalty and there's no termination fees with any of these, or I don't know if that's the right word. There's no penalties. So you just have to pay off the $90,000. So that's why we kind of manipulate it, if that's the right word, where it's like, we're still going to take the 25-year term because it gives us the lowest minimum. So that way there's just flexibility. If someone only wanted to pay $750 for the first year, maybe they're waiting. They know they're having another stream of revenue coming in the next year. They just got another job. They've created more cash flow. They're waiting to file taxes to get that big hit with the tax credit back. Now we're just going to knock off as much as possible in the first few years and pay it completely off.
Got it. So if we went this route where we invest during the time frame of trying to accelerate this for the purpose of whatever this matures at, you're then throwing it on the loan amount. that would make sense if we can produce a rate of return, I would say double what your cost is here. Double your cost to finance, right? That rate, whatever that rate is, right? I'd say we need to have that be double. And when you have that standard, oftentimes this may not make sense, in my personal opinion. It only makes sense if you're gonna finance but not accelerate it. Just ride it out and do what the client did, where they're going at the 25, they got a relatively lower payment. They got all these cash incentives. The net cost of their system was going to be like, I think you said 86,000 was the net cost.
Mm-hmm.
So the net cost of the system was around 86K net. And whatever that payment amount is, you can then say, okay, let me go invest. Let's see how much more income I can create, more value I can create in the marketplace. And then once I've amassed a certain amount of cash, then I can pay off what's remaining and save that net interest and then recover the cash flow payment. The cash flow payment comes back to whatever we use to finance. Okay, so you can do something like that, right? But if you're gonna go I like this route more for the person that has the capital, you have good income, you have good cash flow already, and instead of going with in-house financing, if you've got the means and you don't have any place to deploy the money as of right now, you don't have any major projects going on, you may want to consider self-financing to avoid that high dealer fee, accelerate the debt. Now it's gone. Now you've got production. So once the system's paid off, it's paid off, right? So now whatever my electricity cost was, it's being offset by the production of those solar panels. So I really shouldn't be coming out of pocket if I have the right system design for my home. Does that make sense? Am I saying that correctly?
Yes.
Okay. Cool. So then hopefully that's clear for those that are listening. And to remember, the key points here is that a high rate doesn't always necessarily mean you're paying more money compared to that lower rate. And I don't know too many solar salespeople or consultants that are going to take the time to go through that. And I would be willing to guess here that if someone went with the low rate, high dealer fee, your commission, does that have any effect to how you're paid? No? Okay, so there's no incentive then for you
No,
to
because
sell someone.
we don't, at least with my company, no, it's commission usually is based on the size of the system. It has nothing to do with the financial side of it. So that's all dealer fees being kept by the financing company, which my company doesn't even have partnership with. So to us, it's all the same, whether someone does commissions the same, whether it's a lease or it's cash, finance, HELOC, PLOC. So I think the reason a lot of solar consultants don't take the time to explain it all is they just honestly don't know. There's a lot of stuff that's not fully transparent by the finance companies. And unless people take the time to really dig behind and look at the dealer fees and what the different options are and the formula.
That's what this channel's for. Right, we dig into the weeds. We look at the terms. We read the agreements. We ask these questions. We're curious. We're an extra curious type of an audience that is trying to make sure that we're not getting one over us or getting taken advantage just because of our lack of effort to run the numbers. Right, so that's another big takeaway here is let's make sure we're always running the numbers. I think that's super important. Not just getting emotional about a particular decision or just looking at one aspect of the loan, which is the rate, which is what everyone pays attention to. So now there's one final thing before we close out here, which is homeowners insurance. If you decide to go the route of owning solar panels, what happens to your homeowners insurance?
Yeah, so it's definitely different in every state. I know I've heard, as you and I live in Florida, and there's a lot of people that are scared to go solar in general because they hear these horror stories of, oh my gosh, my homeowner's insurance is going to drop me if I go solar. That's not necessarily the case. But I think it has happened before because people have gotten solar systems installed that they've owned and they haven't added it to their homeowner insurance. And then something happened in a hurricane. So they tried to file a claim and the homeowner insurance was like, what solar system? So They were dropped more based on like being a negligent,
Correct.
what is it, providee, not provider. I don't know what the right one, a negligent insurance recipient,
Yeah.
but not because they had the solar. And I think a lot of times people were avoiding letting the insurance company know because they didn't want to deal with a potential increase in premium. It doesn't happen all the time, but it does happen. Sometimes it's only a few $100s extra. Sometimes it can increase the premium up to $600 to $1,000 a year, depending on the type of insurance, the location, the size of the system, the size of the home. You also can get quotes too from a really good P&C person. Denzel and I know some great people in the Florida area too. So if that is something that people want to get good quotes and shop around, I know all the insurance companies here work with people that know, okay, what if you are getting solar and you want to own versus lease, we are going to do the responsible thing. We are going to add it to your policy and there may be an increase, but again, we'll run the numbers. Let's minimize the increase and making sure we're not compromising on coverage versus a lease. And you can go and watch some of the other videos we've done on leases. One of the benefits of leasing is you are leasing it from what we call a third party owner. And the third party owner is the one that pays to have it insured because they own the system. So there's still no out of pocket, no cost to install, but leasing could be very beneficial for many reasons. Not every state offers leases. Florida's one that has a lot of leases going on right now. I would say the last 5 or 6 installations I've done have all been leases because it's just made sense. So that's a nice perk about leasing. But if you are going to own, make sure you add it to your homeowner insurance policy.
Beautiful. And I myself, in the next couple of months here, I'm going to be leasing as a new homeowner. And those of you that are watching that are homeowners, let's make sure we're not doing things cheap when it comes to the type of work that we do to our home. Let's make sure that we are giving the right information to your homeowner's insurance so that we don't get dropped, because that's the only reason why you would get dropped is because your neighbor next door got dropped because they didn't follow the rules, right? So it's as simple as that. So you can't always go off what the neighbor said and now they're pissed off and now you're scared in fear, when if you would have done things correctly, we would have planned for it in advance. So another point to this video here, those that are watching, let's make sure we're still positive cash flow if we're going to go finance. If it means that your bill increases, then 2, if your bill increases, there's a likelihood that when you add solar panels to your homeowner's insurance, that'll increase because you are insuring the panels. It does come with a warranty though when you purchase these solar panels. But after the financing term is complete, that warranty drops. Now you are the sole owner of the solar panels. I'd be curious to know if homeowner insurance would increase.
We actually, so my company has a 30-year, it's called Power Care. So it really doesn't matter if they pay cash outright, if they secure their own financing, if it's a 7-year or 25-year term. If they own it, they will have 30 years of Power Care warranty for the system. After 30, then they're on their own. With the lease, Sonova is 100% responsible for the system or whatever. If you don't go through me and you do another solar company, they might use a different third-party owner. But the one that I work with, Sonova, for the lease 25 years, and you can do 2 5-year renewals. As long as you're leasing with it, they guarantee it to work as signed contracts. So 100% everything's taken care of by them. Maintenance, insurance, it's nothing out of pocket. And so either way, 25 years with the lease or 30 years warranty with ownership.
Okay. So then here's an interesting question now, because I'm thinking if I finance or purchase, regardless, I've got that 30-year warranty. So I'm wondering why would my homeowner's insurance, why would they increase my premium if it's already insured for the next 30 years? I would assume that they would increase it.
Not insured, it's a warranty. There's a difference.
So there's difference. Okay, explain that.
Just so or something happens, but it doesn't necessarily cover hurricane damage. Right? That's where your insurance is going to do a claim. So
okay. So the warranty doesn't cover.
It covers penetration.
Okay.
Because saying, okay, if we installed something on your roof that is now causing a leak because of installation or something, that's our responsibility, our bad. We're going to, anything that was caused by installation, we're responsible, we're going to cover. But if it's a hurricane that blows the panels off, which is, I know, a big concern in Florida, that's probably an insurance claim. And so the insurance will pay for it. That's,
But they need
again,
to
why
know. They need to
it's insured, right?
know.
They need to know. They're not going to honor a claim, but they're like, what system? It's like trying to file a claim for your wedding ring that you lost, and then you're like, you didn't insure your ring. You can't file a claim for your missing wedding ring or piece of jewelry that was stolen if, like,
Right.
you know, or trying to file a claim on your car, and the car insurance is like, what car are you talking about? You didn't have the second car listed that your 16-year-old just crashed. Like, you're on your own, Good luck.
Gotcha. Okay, that makes sense now. That's clear. Okay,
But
perfect.
like parts warranty, if there's anything that's wrong with the panels or wrong with the inverters or wrong with the battery, or it's not functioning as designed. So there's like the
That's where
manufacturer
you guys come
warranty,
in.
and my company has an additional, it's called Power Care 30-year warranty to make sure that the system's designing as functioned, but that doesn't include external things. That's an insurance thing.
Got it. Okay,
Yeah.
that's perfect. We can close it out right there. So action steps, again, comment below if you've got questions that we might have missed. And those of you that are ready to get solar on your home or another property, whatever you're, maybe at a rental and you're looking to put solar on it, whatever it may be, reach out to Maureen. She's got a link below in the description as well as in the comments section. You can reach out to her, or you can just email me directly if you can't find it. Reach out to me. Happy to connect you to Maureen. You guys would jump on a call first. She's going to ask you for your electricity bill, right? So you might want to just have that ready. And she's going to walk you through what your home would need, right? And then you've got a strategy where you design the system to be slightly more than what they need, right? And that really accounts for additions to the family. They decide to buy a Tesla, so now you need a charge. So there's a lot of different factors that come into that, and also the season, right? For example, you were working with me right now in Florida. It's been pretty cool for January, February. So my bill is going to be probably a lot less than it would look like in July. So if you designed me a system based on January and February's electricity production, that's not going to be efficient come summer, right?
That's why we go on I always need a 12-month running average. So I need to know someone's usage for 12 months. So it goes through all the seasons. I was just chuckling because when you were saying, oh yeah, we live in Florida and it's been pretty cool. And I'm like, it's been so cold. And I know it's embarrassing to say out loud because you probably have people like watching in from like Wisconsin and Minnesota, and you
They're like,
Floridians, it's cold. I'm like, it was 58 degrees the other morning. I was like, it is freezing outside.
I was just in Vegas and it was like 45, 50, and I'm seeing people walking in shorts and a t-shirt, and I'm all like hoodie, sweats, another shirt, long sleeve. I'm like, what's going on? But yeah, it's like normal weather.
Yes, it's been cool enough where the AC hasn't been kicked on full gear year round. So your bill for sure is less now than it's going to be come summer. So that's why, we, regardless of where you live, and also too, every state's going to be a little bit different. Some of you live in colder places where you actually have gas heaters, so you're hardly tapping electricity at all. So there's so much usage during the summer months, and in the winter months you have gas pretty much. That's your higher utility. And so we look at all of that. I can personally sell in 25 states, and it's complicated. Denzel and I have been trying to figure out, well, how I want people to know like that I'm going to be able to serve them. But recently you had someone from Wisconsin in your community reach out, and I was able to connect them. So I actually know a lot of people that I trust, and I was on the Zoom with them too, because they already knew me from this. And so I was able to reach out in my network. And so even if I'm not the one that can directly help, I'll let you know in the email based on which state you live. And I will always do my best to connect you with someone that thinks the same way that I do about solar, and that's an expert in that state and has the ability to do systems in that area. So if you have any questions, please don't hesitate to to reach out or post a comment, and I will absolutely do the best I can to answer or guide you in the right direction if I'm not the person.
Those of you that are clients of mine and you're like, okay, Denzel, spoke with Maureen. She gave me all the financing options. I think I want to go the cash route. Reach out to me directly, and then we can run the numbers externally with self-financing, because that's not something Maureen can provide. That's not, she's got only the in-house financing. So
Right.
give me a call, reach out to me if you want to discuss your HELOC, your cash value policy, your line of credit, maybe 1 or 2 credit cards that you want to throw on 0%, and you want to just put a whole little strategy together. That's something that I can now serve you with. And then Maureen and I come together and help you make the right decision. So with that being said, thank you again. God bless you all, and we'll be talking soon.
Bye.